All right, let's go ahead and jump into the last business retirement account, the SIMPLE IRA. So this is the Savings Incentive Match Plan for Employees, SIMPLE IRA. Came about a ways after the SEP IRA, but a little bit before the solo 401k. I like to refer to the SIMPLE IRA as a hybrid between an IRA and a 401k. If you do have employees for a business and therefore you don't qualify for a solo 401k or you don't qualify for a SEP IRA in the sense that you'd be running a much more costly plan for the business, a SIMPLE IRA might be a good fit for you. It can be a lower cost way to have a retirement plan for you and your employees that are eligible. So let's talk about contribution limits. How much can you contribute to a SIMPLE IRA? $13,500 as an employee contribution when you are under the age of 50, $16,500 when you're 50 and over. Again, these are for 2020, all right? These are the limits for 2020. If you're watching this in a future year, just check out the IRS website for the updated contribution limits. They generally do change year over year. So $13,500 or $16,500, just like the solo 401k, this is up to 100% of your earned income, your established earned income. So if you're only paying yourself, let's say $14,000, you're under 50, you can get the full $13,500 in the plan. Whereas with the SEP IRA, you're limited to that 20% or 25% figure. Now with a SIMPLE IRA, like the solo 401k, you're wearing two hats, an employer hat and an employee hat. As an employee, you can contribute these amounts, and then as the employer, you can match 1 to 3% of your income. Let's say you're paying yourself $100,000. Okay, and you are 50 or older, you can put $16,500 into the plan, and then you can match 1 to 3%. So let's say you do the maximum match of 3%. 3% of $100,000 is $3,000. That gets you a total of $19,500 into your SIMPLE IRA. So there's some advantages, as you can see there with the SIMPLE IRA, especially if you have employees. You can contribute higher amounts than an IRA, which is $6,000 or $7,000. This is a tax-deductible plan, so you get a tax deduction for it, right? But on the con side, as you can see, the $19,500 is less than what you could contribute here to a SEP, not by a large margin, but by a $500 margin, and certainly a lot less than the solo 401k, all right? But again, the advantage that you pick up on the SIMPLE IRA that you don't have with the solo 401k is you can have employees for this plan, right? And they could take advantage of the benefit as well. And the match that you make as an employer is a tax-deductible match for the business. So you see the pros there. Obviously, you avoid added maintenance, potentially higher contributions compared to an IRA, and then you have the benefit to the employees.